In this video, we'll cover the Layer 1 market empathy questions you want to apply to your trading system. Answering each one of these questions will enable you to be in tune with the market at a deep level, and I believe give you a true edge on any market you trade. Now, before we jump in, if you haven't watched the first video where I share what I believe is my #1 trading edge, you'll want to definitely watch that. This video is a continuation of the concept I introduced called market empathy. A quick recap here. Market empathy is a shortcut you'll use to put yourself into the perspective of different traders, trader groups, and market participants. It's not just the perspective, it's the positions, the emotions, and the feelings of those participants. In this video, we'll go through one by one the questions to build true market empathy. And before we jump into those questions, I'll give you an example of how to think about market empathy. Imagine you know how to fly a plane. Now, you might have learned on a certain plane, maybe a smaller plane, but you should be able to jump into just about any plane and be able to fly it. Of course, you'll have to have specific training on that particular plane, but it should fly the same. It should have the same dynamics that the small plane has, just on a larger level. And market empathy works much the same way. Once you get the foundation down, then you're applying the differences on each individual instrument that you trade. In this video, we'll specifically talk about how to build market empathy in the crypto market. So let's jump in, and the questions that you see here on the screen are what I call Layer 1 questions for building market empathy. Now, I'll go through each one of these individually. I won't go in depth because to go in depth with each one of these questions would take quite a bit of time, and I do that in my training. Here, I'll just give you some tips and advice on how to apply these within your current trading system and some things to think about. But if you really want the shortcuts on how to actually apply these to the chart, apply these to the market, and really make this second nature to your trading, that's something that I have in my training. And I don't mention this often. If you're interested in the training, just check the description down below for a link to my website. Also, you can join Discord and send me a direct message and ask how to get started with the training. So let's jump into these questions. Now, I call these Layer 1 questions because there are Layer 2 questions. Those are more advanced. And one thing to keep in mind, just like anytime you learn something new, applying these questions and making it second nature will take a while. But the goal in both Layer 1 and Layer 2 market empathy questions is that when you look at a chart, you'll just naturally, through habit, look at the chart from these perspectives. And it does take a while. Like anything else you learn, it takes a while, but you definitely will make this a habit. And I will say this again, I believe it's a huge edge to be able to look at the chart from not just 3 dimensions, but in a way 4 dimensions. And that's what we're talking about with market empathy. And one more thing before we jump into each individual question here. When you're looking at a chart or you're looking to enter a trade, you need to be able to answer each one of these questions. If you can't answer each one of these questions, then you better figure out how. Because without answering these questions, you are not looking at the market from a perspective that gives you the biggest edge. So that's my belief. I believe that there's many factors to having success in trading. Of course, the #1 factor is being able to control yourself and building a trading system that gives you an edge. My belief is that market empathy is one that bleeds over to all trading systems because it puts you into the right frame of mind to look at the chart, to look at the instrument that you're trading from different angles to protect yourself in the most ways possible. So I probably could go on and on about the reasons why, but I think you'll get it once we go through these questions on how they're powerful and how they'll help you see the market from different angles. So let's jump into the first question. The first question that you want to have in your mind when you're applying market empathy to when you're looking at a chart or any instrument that you're trading is, what does the asset or instrument holder base look like? Now, before you trade anything, before you enter any market, you need to do this research and you need to understand who makes up that market. Who are the people that are trading that? This is probably 101 in trading. You probably already get that. But one thing that I would suggest is if you haven't done it yourself and really thought about that on the crypto side, you should do that. Now, I've done that in the Trading Cryptos Primer doc. You'll see a link to that down in the description below. I've just covered some of the high-level market participants, and that's good for the overall crypto market. When you're looking at something individually, and let's go to CoinMarketCap because this will really break it down good. When you look at CoinMarketCap, if we ignore Bitcoin, Ethereum, and Bitcoin Cash, for instance, we'll ignore kind of these and Litecoin, these kind of core crypto assets that I'd say even the cursory person that knows almost nothing about cryptocurrency probably has heard of. Maybe not Bitcoin Cash, but I'd say Bitcoin, Ethereum, and probably Litecoin, most likely. If you ignore those, but we look at the cryptocurrencies in the top 10, the investor base or the trader base of XRP, EOS, Stellar, Cardano, IOTA, Tron, let's take Tron out of that because it's not in the top 10, is different than the trader base that's way down here in the hundreds. Z Classic, Gas, although that's part of Neo, Elastos, 10X, I mean, it's not exactly part of Neo, but you understand the relationship to Neo. Theta Token, Pivx, these other assets, they have a different trader base than the top 10. Another thing to keep in mind is that when there will be funds, and there already are funds, that look to basically be a, I'm struggling with the word, but be a mutual fund for this market where they distribute their holdings across the top 10 or the top 15 or the top 25 crypto assets. Those are going to be large institutions. Those are going to be larger traded funds. Those are going to be indexes of the crypto world. They're going to hold the top 10, the top 15. That's going to be a much different base than something that's down in the 30, 40s and beyond. So when you think about not only the crypto market and you think, what does that asset holder, what does that instrument holder base look like? That's going to be different depending on what you're trading. So if you're really focusing on the top 10 and XRP, Stellar, Litecoin, Cardano, the way that trading base works and operates and functions will be different than something lower down, or I'd say lower down in the actual coin market cap listing. This is just giving you an illustration of how to think about it. To go further, this is just general. Of course, you probably get that already. To go further, what you really want to do is you really want to understand the community of each one of these at a core level if you're going to trade them. If you're going to trade them and maybe hold them long term, and you're looking for an entry, you're looking for the best place to enter, you're looking for how does this asset holder, how does this instrument holder react? How do they react when news comes out? Are they very fickle? Is the trading base made up of more speculators? These are questions that you want to ask because this will drive how you enter a position, how you exit a position, where your stop losses are. It will drive a lot. You'll maybe change your rules based on these actual individual ways that you would look at the market. So the first question in recap is you want to define what that asset and instrument holder base looks like. And in the training, I share some really unique ways how you can quickly and easily do this, even on something that you have never heard of. If you know the way I trade just about anything on Binance and a couple other exchanges because I trade charts. But I also do look at and learn that trading base relatively quickly so that I can understand and apply the right rules to trade that correctly. Now, the next question is, what are the long-term holders thinking and feeling? And I'll take just a little brief aside here. All of the questions that follow, I'll be mentioning the exact phrase thinking and feeling. And there's a reason for that. And it might seem difficult at first. How do I understand what these people are thinking or feeling? How do I understand? They're not going to tell me. This is the exercise that you need to go through. This is where you need to apply empathy to the market. And you need to put yourself in those shoes of the actual trader. And I'd say the seat, because most traders are sitting, right? So put yourself in the seat of those traders and look at the market from the perspective of those individual traders or that trader group. So when I share these questions, or these next questions, that's what we'll be talking about. So let's pull up a chart. We're looking at IOTA, Ethereum on Binance, and it doesn't matter if it's the USDT pair. I don't know if this trades USDT, but it doesn't matter if it's a USDT pair or ETH or Binance. You really want to think about the actual holder of the asset or the instrument itself and put yourself in the actual shoes of that person. So when we look at this chart here and we ask the question, what are the long-term holders thinking and feeling? And I'll just take a step back because I don't know when you're watching this video, but as you can see from this chart, the crypto market is pretty much chart after chart looking like this. Some of them have done better than this, but you'll see here from the all-time high, we're down roughly 85%. So when you ask these questions, they are important at this range. They're also important as price moves up. So the anticipation here, and I'm buying on anticipation that we are going to see maybe some of these highs exceed some of these highs on some of these things. Some of these things might not quite reach it. So as I'm looking to buy something, and actually if you're in the Discord group, you'll see a link to that down below. You know, for the last week, maybe not the last week, but the last 5 days at least, I've been saying I'm looking for an entry for IOTA. And if we look here, I've been very patient. I've been waiting for it to find support and wondering if it was going to find support at this line here. It does not appear to find support, so I'm still patient. I'm sure tomorrow I'll add a message in my trade section and say I'm still waiting for an entry on IOTA. A lot of this is because of BTC. If you see this actual blue line here, this is BTC dumping. So once BTC either hits a range or decides to actually start moving up, then I anticipate we'll start seeing support here. So once again, it's just being patient. But when you're asking that question, what is the long-term holder base? What are they thinking and feeling? Well, they're deflated right now, of course. And this is where you do want to know the historical nature of this particular asset. You want to understand, how did they get this? How long have they been holding? Did they have an opportunity to dump here? You also want to look at the chart as price rises. So I'm looking to enter this here, and I'll just give an example of how you put this individual question through market empathy. I'm looking to enter down here, probably in the middle here of this value channel is where I most likely, I think, will find support. But I'll be watching for support to kick in and BTC. And I'm looking for somewhere, my first target is this range here, 75%. Is what I'm looking for. This is a longer term position. And then I'm looking for something along the lines of maybe 110%. And then and this is where I'd start asking this question very, very heavily, in addition to all these other questions. As each level gets hit and as it starts going through each level, I'll be asking these market empathy questions and looking at the chart and obviously looking at all my technical analysis and going through and saying, what do the long-term holders feel? What has been the sentiment of the long-term holders? What are they feeling right now? Do they have confidence that this is going to quote-unquote moon? Do they have confidence that they just keep having misstep after misstep? Is the long-term holder base still confident that there's an upside here? These are the questions that I'll be asking at every single level. Obviously, it's real easy to answer that question where it's at right now. And this is the best time to buy. This is why value channels are very, you can look at a chart anyways and just say buy low, sell high. That's very obvious. But value channels kind of show you where the supply and demand zones really pop up here. So this is a supply and demand zone that looks like it's going to be at least for the long-term holders. What I'd like to see, this is a contrary view, is I'd like to see some long-term holders throw in the towel here and for price to just dip all the way down here. That's what I'd like to see to get the best price possible. And that's what I'm watching for. So I'm watching for the long-term holders that have maybe held out and had, if you just look at this, we'll look at the weekly chart. And we'll go through here on the weekly chart. This is, what is it? It's August? Yeah, so it's August. So let's say that there's a long-term holder that bought in here and was looking for it to really go and exceed this high, and they didn't sell up here, and they just watched it dip and dip and dip. And so they've been holding for 252 days. And what I'm watching for in the chart is behavior that shows me that people are throwing in the towel. That's what I'm watching for. So, and I'll come back to this here in another question as well and illustrate how you can look at this from a different perspective. But that's what I'm watching for. So when you look and say, and I'm getting more into the details, and I knew I was going to do this in this video. Instead of just cover them at a high level, I was going to get into details. But so this video probably would be an hour long. When you're looking at the chart and you're saying, well, that's support, that it bounced from there, and it probably will bounce from this range, I'd assume, if Bitcoin does turn around. So you're looking, this is heavy support here, and you would expect that this would hold up. Well, what you're looking for here is an acceleration of panic, of an acceleration of people throwing in the towel at multiple levels. Those are the long-term holders that are saying, this project, I need to put my capital somewhere else. That's what you're looking for. And typically, that's where you really want to be patient and see an acceleration to the downside before support actually kicks in. You can wait for confirmation as well. And like I said, I'm getting way into the weeds. But that's how, when I'm looking at market empathy and I'm looking at what are the long-term holders, buyers, and what are they feeling? What are they thinking? Well, you're trying to get in their head right here. And you're saying, right now, at this given time, are they ready to throw in the towel? Are they sticking with it? Are they doubling up? Is there proof that they're doubling up? Can I see that proof in the chart? And you are seeing an increase of, I would call this accumulation. We are seeing good volume there. So you could say that this is accumulation. And I'll be looking to do that as well, accumulate a pretty large position here as it goes down. But that's what you're looking to actually, within the chart, within the price action, within maybe other technical research, you're looking for that answer to inform you in your trade decision. I know it sounds like a lot because I'm going into the weeds with this, but you do this stuff, it becomes second nature. And that's what I got to say with all these questions. When you get them down, they become a habit, they become second nature. Now, this next question alone will be a game changer, I think, for many people, because this is just a multi-dimensional question into itself that I find most traders don't ask. But when you start asking, you really start looking at the market from a lot better angles, and it's actually a good protection question to ask yourself, because oftentimes you'll find that you won't enter trades when you ask this question correctly and you answer it correctly, which is, what are the buyers who recently bought thinking and feeling? So a lot of times you get tunnel vision, and let's change to ADA. So let's move to something else just so we're mixing it up a little bit here. So ADA, similar chart pattern we're seeing at the bottom of a value channel. You can see here, I don't even have to draw the value channel. You can just see that it's finding maybe support at the bottom here. Now, when you're asking this question, this is where it depends on your trading time frame and the type of trade that you're doing. Are you doing a scalp? Are you doing a swing? Are you doing a long-term position? What are you doing? But asking this question from multiple time frames will get you into the right frame of mind. So the way to look at this is, when you want to ask, what is someone, a buyer who recently bought, what are they thinking and feeling? So we're looking at the day time frame, Cardano, BTC. And if we just use the long tool here, let's say that they bought 2 days ago here. They're currently down just 2%. So are they worried? They're probably not too worried given the crypto market. 2%, 2 or 3% isn't that much. And if they know how to read charts, they're looking at the daily chart potentially. They are seeing some support and volume kick in. So it's looking like there's some stopping volume here, and there will be some support kick in at this range. So someone that bought 2 days ago is probably feeling okay about their position. A professional trader that bought 2 days ago, if they bought because that they saw this as a breakout above this range here, and they thought it would continue to break, obviously they're still feeling okay as well. So when you're thinking about what did a buyer who recently just bought thinking and feeling, you want to multi-dimension it, meaning you have a professional trader, you have maybe someone that isn't a professional trader that's a complete emotional trader. Is an emotional trader that's down 2%. Are they still in this trade? If you game theory this out real quick and just say, well, if they bought 2 days ago, they were down 6% or so, and now it's up to 3.6. I think I'm doing that right. Obviously, different position because I moved it. If you go to a different time frame and you look at the 4 hour, and it's pretty obvious to game and say, well, if someone bought down here, they're still confident in their position. They're up. They feel like they made the right decision. If someone bought here, but where this really helps is looking at the chart from the angle of someone that just recently bought and understand what are they thinking and feeling. Someone, if we hide the chart, hide right of the chart, and we look at, for some reason the price line is here, but if we look at this here and we say someone that bought here at this section right here and it didn't turn around and it continued to go down, what are they thinking and feeling? You want to get into their mindset. Are they ready to dump that position? Are they seeing, if the best thing that this can do, this type of question can do, is when you're looking at the market from the time that other traders entered the market, you would be making the same assessments that they would be making at this point in time. So when you're looking at, and I have another video on YouTube talking about where capital is trapped. So there's obviously traders trapped at this level here unless they stopped out, but there's capital trapped at this level. So for it to break out above this ADA, it has to break through all this capital that's stuck here and the capital that's stuck here and the scalpers or the swing traders that bought here. So when you look at this from different angles, you're putting yourself in the perspective of what are the swing traders feeling. If a swing trader bought down here, right here, what does the swing trader on ADA typically look to make? And if you say, well, let's just say this run here, maybe they're looking to make 10%. Well, where is that 10% at? That 10% is right here, right around the moving average. So this moving average right here, the 99 moving average, right around the 99 moving average. So when you look at the market from this different perspective, and I'm trying to move this along quick, what you're really doing is you're putting the emotional layer on top of the market, and you're adding the aspect of just looking at charts and looking at price action and what it reveals, and you're putting kind of the secret sauce to it, because then you're looking at the market of what actually happened. It's one thing to say what happened with price, what does it reveal, what does this candle pattern say, what does this volume say, what does this support line say. It's a whole nother thing to put yourself in the seat of another trader that's been in that position. And if you've been in a position for 2 or 3 days and you've watched that position and you watch it unfold, you know the emotions, you know the analysis that you go through. You want to game that out and understand how they're looking at the market and whether or not they're going to stay in, or when they're looking to get out, or when they would be potentially looking to get out, or where they would see weakness, or where they would see strength. Those are the type of things that you really want to keep in mind when you're answering these questions. So let's move on to the next question. And this one here is probably the shoe that you're in, which is, what is a potential buyer thinking and feeling? But get outside of yourself for a second and the knowledge that you have, and put yourself in the shoes of just someone in general, and they're looking at the chart. So we're looking at Cardano. What are they thinking and feeling? Are they feel like they're going to miss out? Do they see this? If you look at the 1 hour time frame, do they see this and feel like they're going to miss out? I would say they don't quite, but if it starts hitting maybe up here, they might. And maybe you could say maybe on the 1 hour time frame, someone that is a emotional trader would be looking at this right now and saying, well, it's about to break and I want to catch the breakout early. So that would be one way that you would look at it. Once it breaks above this area here, if it does, then the other question you would be asking is, someone that's looking to buy, do they feel like, oh, it's going to break out? This is where it's never going to be this cheap again. I want to buy now. And then is there proof in the chart and the price action? And I'm showing one time frame. You want to look at this on multiple time frames. And even down, if you want to, I'd say most people are entering usually on the hour, 15-minute, 5-minute. If you look at this and look at that same type of emotional behavior, what is a potential buyer thinking and feeling? What do they see? This is where also looking at the depth chart, even though I don't ever look at it or anything else, this could be helpful from a perspective of someone that isn't as sophisticated in the market. What are they thinking and feeling if they look at the depth chart and they look at the order book? Do they feel confident? Do they feel like there's support? And we can see here, if I'm watching this on the 15-minute, and I'm just, if you remember maybe your early days of trading, if you're like me, I was very emotional. I'd like to say I wasn't, but I was very emotional when I started trading. I'd look at this and say, well, I'm going to miss this. It's going to break out. This is my time to buy. Not waiting for a pullback or not waiting for confirmation here to break this section here. So not waiting for a confirmation or not buying on a pullback. I would buy here. And what happened more times than not is that I would buy here and then it would dip down here. So this is just kind of the game theory, and I'm using the word game theory, but the questions that you actually want to ask yourself and how you want to go through this is, if I'm a potential buyer, what am I seeing? What am I feeling? Because you want as many of these things aligned in your favor as possible, especially in the crypto market, where on most exchanges you can only go long. So you want as many buyers at your back as possible. And that's actually a good lead in to the next question, which is, what is a potential short seller thinking and feeling? Now, in the crypto market, there's only a few exchanges that you can actually short in an individual crypto asset right now. Bitcoin, Ethereum, Litecoin, I believe most of those you can short. And then obviously on certain exchanges you can short. On Binance, for instance, you can't short anything. So if you're just trading on Binance, you haven't traded anything else, then you probably aren't experienced as thinking that you have the ability to short or actually shorting something. And I'm not going to get into the discussion of what shorting is, but basically shorting is just you're looking for something to go down, and that's where you're making money. So without getting into the discussion of how shorting works and how it works in other markets and how it might work in the crypto market and everything else, especially with distributed exchanges, the way to look at this is that if I was a short seller, what would I be thinking and feeling? So I'm looking to short Cardano right now. And at this point in time, I wouldn't be shorting Cardano right now because I still see, I would be going against the trend that I see in action right now in the 15-minute. So I wouldn't be looking to short this quite yet. I don't see weakness quite yet. So what you want to do And if you haven't looked at the market from this perspective, then this is going to be more important going forward, because as the crypto market matures, shorting will become more prevalent and it will be more popular. And it should be for a market to be completely mature. You should be able to do both sides of the trade. That's what a mature market would allow. So I believe we'll get to that point in crypto where you will have to start thinking about where the short sellers are, where the short squeezes are. You see that a lot in Bitcoin. And here's the way to look at this: is the shortcut answer to this is, if would I short this here? Would I bet? And I hate to use the word bet. Would I trade on this going the opposite direction? And if you would, then you would be looking at the market from that perspective, and you would say, is there a lot of short interest here? And what do I know here? As we see the trade unfold, maybe I should have shorted. I still wouldn't short this, because with a short here, and this leads into how you really want to look at this, is if I go to the short tool here, if I shorted this here because I thought that there was weakness here and I didn't see this rejection as strength, and I think that it's going to continue down and break all of this support here, if I was looking to short this, where would I put my stop loss? Well, most likely I'd put my stop loss up here. That's where most people would put their stop loss, is here. And then you'd ask, where would you look to exit a short position? Would it be here? Would it be the break of the support? Because you would expect that once it breaks this area here, that there will be buyers kick in the market. So when you're looking at the market from the perspective of the short interest, that's how you're looking at this. So how would a short seller look at this? This isn't as important. Once again, it's important because some exchanges do have the shorting ability. It will become more important, so you need to start, if you haven't, you need to start incorporating this into your market empathy in your trading system, because it's going to be important. And if you're on an exchange where you can short, it's great, because you can trade both sides of the trade. It is hard. It's one of those things that you have to adapt to, and you have to actually, and I've heard people say that not all traders can do it. I think you just need to think different perspectives about where you want to be on the trade. But I believe all traders, as the market matures in the crypto market, you need to be able to understand how a person that is shorting it will look at it. Because even if you're not going to, they're a market participant. And you need to really understand where that might lie. If we jump over to the Bitcoin chart, for instance, you'll see on my chart, at least on the daily here, the bottom section here is a chart of the long and short positions on Bitfinex. And you'll actually notice right now, the red is the shorts, and then the green is the long positions. And you'll notice shorts have really jumped, really, from this decline. From this day here, shorts really started to jump up. When you start to see these converge like this, typically that means that the market is at an indecision phase, and we're going to see a move one way or the other, just because people are it's not quite equal, because there's still more long positions here. But you'll see here, at this point in time, shorts really declined. There's many shorts here, and then they really declined on this big move here. So as the market moved, you're seeing crossing of shorts and longs. Understanding this and understanding what this means, and understanding where, and I'll get into some of this on the layer 2 discussion, but you need to understand where shorts and longs actually are within the market. It's going to be more important in the crypto market as it matures. So the next question actually is about shorts as well, which is, if it looks like there was short interest. So let's say that someone did short this here. Let's say that you look at it from the perspective, and someone did short it from this range. This, I already kind of covered this, but what are those that already shorted? So the first question was, if if someone was looking to short it, how would they look at the chart? How would they look at it? What would they be thinking and feeling? Would they be looking at it as a good shorting opportunity? For someone that already shorted, let's say someone went, I won't say counter trend, but let's go to the 1 hour. And you could say quasi counter trend. This isn't quite a trend. But here, as we go here, as it went above these moving averages here, so this moving average right here, for instance, as it went above all these moving averages and started following these moving averages, this is where you would maybe ask, if someone's shorting here, where would they put their stop loss? Where are their stop losses? And I'll say this in general, most people, they put tight stop losses, and this is why they'll short maybe here, and then they'll put a stop loss just above this. That's not a good trade. So I'm not going to get into the details other than to say, when you're looking at this and you're saying, well, someone shorted from here, and I'm not going into this deep because shorting and looking at the market from a shorting perspective is a separate video unto itself. But if you're shorting here and your stop loss is here, that's not a good position. Your stop loss needs to be more like up here. So if you're going to short, it needs to be at least farther away from here. Farther away where the average rejection wick is not going to hit you out of your short, and then you'll still be in that trade. So one of the things that you really want to understand is someone that already shorted, though, where is their stop loss positions? Because if those stop positions get hit, this is why this is important, is that if there are a bunch of stop losses, and let me draw something here, so let me get the tool out. But typically when you have stop losses, or when someone's shorting, and this works on longs as well, but when someone's shorting, they're going to put their stop losses around here, and there's going to be clusters of stop losses. So there's going to be a stop here, there'll be a stop here, and I'll just copy, there'll be a stop here. There'll just be clusters of stop losses right around here. So you can just imagine when stop losses get hit on the short side, well, what does that mean? That means that that sell instantly becomes a buy. So this is a very simplistic view. Obviously, the market doesn't. This is a simplistic view, but it's a good way to look at it. So when price, and if we pull out the arrow tool here, when price hits this on maybe a big spike, it's going to hit all these stop losses. Those stop losses are going to trigger buys. So then you'll see a reaction, and it'll be typically a spike. Now, usually you'll see sellers, investors or sellers sell into that strength, sell into those stops, or buy into those stops. It all depends on the chart, and it depends on the trading and everything else. But understanding that and looking at the market from this question of someone that already shorted, where are their stop loss? Where most likely are their stop loss? Because this might guide your decision on where you would enter. When you understand that there's a lot of shorts here, and this would be potentially a short hunt where the market would like to go and to hit those stop losses, your entry might actually be here on a breakout. Not here, because this is your reaction. You want to see the follow through, because what you want to see, and this is just going through what you want to see, is if you know that there's a lot of short interest here, and you're reasoning that people shorted from this angle or from this level. You want to see price hit there, and then it's going to create a reaction where it's going to go up. And then you want to see follow through. Usually there's a pullback, and then you want to see strong follow through, which shows that professional traders and other people are buying that pullback for a breakout. If you don't see that and you see something weak, usually it's going to go here, and then it's just going to turn back around. So it hit all those shorts. There wasn't buyers that actually bought the actual pullback, didn't follow through, and then you actually entered here because you thought it was a breakout, but really it was just a bunch of stop losses getting hit that had no real buyer support behind it. I'm giving you an advanced look at it, but that's really what you're looking to do. That's how you're looking to unfold this and unfold the market when you're looking at if there's short interest and someone already shorted, here's where their stop losses are. Here's what it would look like. And it's not just immediate. This is the other thing. You look on the daily too. If someone shorted from this day here, so if someone shorted way back here in this rejection and this here, well, are they still in this trade? Are they out of this trade? The same way that you would look at it from someone looking to potentially buy or potentially enter or just entered, you'd be looking at this from the same perspective. So you're just reversing it. So, and I'm if you're not experienced at looking at the market through a short perspective, that's something you need to research and start looking into, because I'll say this again, the crypto market is going to get more sophisticated. A lot of people are excited about institutional money and other money entering. Well, that money is more sophisticated. It's a more sophisticated trading base, different trading base. They're going to expect sophisticated tools, and they're going to expect the ability to hedge their positions on both sides. So you need to be able to think in that environment. If you're not now, you need to get there as quick as possible. And I will share that I don't have it yet in my training, but I will have a shorting section. It won't be on the crypto side quite yet. It'll be more focused on shorting in Forex and oil and gold and other commodities and other assets. That's what they'll be covered on, but it will transfer over to the crypto market. And it's going to be something that is going to be more important as the market matures here. And I'll share that I do feel that most traders should be on both sides of the trade if they can. I think a lot of people will find that they have challenges on one side or the other, either short or long. But most professional traders and most traders that really get good at trading, they are typically on both sides of the trade. But they need to be able to think in both dynamics. So if it's something you haven't explored, you really haven't looked at yet, I do suggest that you look into and that you look at, because it will become more important in the crypto market as we move forward. So let's move on to the next question. And this is another question where I think many people haven't maybe considered. It's more important when you trade stocks, where you want to really understand what is the management, company, team, or organization behind this instrument thinking or feeling. And I'll share a tweet here that will really illustrate this. Obviously, when you're trading stocks, you understand that the management company, they need to meet their profit levels. They need to meet the expectation of shareholders. So they have a lot of different emotions, and you'll want to listen to various phone calls. When you see the CEO or CFO or other executives out in public, you really want to see if you can gauge what they're thinking or what they're feeling. That can help a lot to get into the mind of what the management is thinking and feeling. If I highlight a tweet that illustrates this really well, Ran here sent out a tweet recently, and it says, spent the morning with an ICO, not to be named. They raised 30 million USD with a solid roadmap. They raised when ETH was at 1200. They panicked and sold their remaining ETH last night. They have 4 million left. Now, this probably came as a surprise to many people that maybe haven't thought about where various people that have raised capital from ICOs have raised capital and have maybe they don't have much of a runway left in what they've raised. And that is, I think a lot of people do understand that the actual coin holders or the teams behind it do dump on crypto exchanges and actually do dump their assets and do look to dump into liquidity. So I think they understand that. But I don't think it's part of maybe the daily trading actual decisions that a lot of people make, which is putting it through the prism of is this a good place that if I was part of this organization or the team behind this, that I would be able to offload, and actually going and looking at the updates that the team has and that the management has made And if it's a distributed organization, looking at the makeup of those holders. And if it was an ICO, look at how was the asset distributed. When you look at all these individual things and you put it all together, it gives you another layer of protecting yourself. And hopefully it's clear, these questions, these market empathy questions, are so that you become a better trader, so that you do better trades, that you protect the number one thing that you need to protect, which is your capital. Every time you do a trade, you're putting your capital at risk. So the more dimensions that you think about a trade, the greater you're protecting your capital. That's your number one goal. Your number one goal is not to actually make profit. Your number one goal is to protect your capital. That's your number one goal. So these questions, this market empathy, is allowing you to further guard your capital by putting the right frame of mind on all the market participants. So understanding where the management of the company or the team, if it's a 5-person team and you're looking to trade that's a higher risk trade. If you know there's only 5 people on that team, and some crypto assets have only 5 people or less, if there are crypto assets out there that only that have that amount of people, it's a high risk that they might dump into liquidity, that they might dump at certain times. So this is where you'll want to look at a chart and look at something like that and say, every time that it runs a certain percentage, do I see behavior that exemplifies someone dumping a large amount of this asset? Is every time that there's strength, is it slowed down at a certain time? And this is just, I'm once again, I'm getting into the weeds, I'm getting into the details, but these are the type of things that you want to ask. These are the type of things that you look for in the chart. These are the type of things that this is, I'm sure a lot of these questions, when I explain this to people and explain market empathy and how I look at the market and my number one edge, they say, wow, you look at it from that perspective. And I got to this point, I developed this from reading a lot of other traders, trading myself, learning, making mistakes, and realizing that just looking at the chart from simple numbers perspective and patterns isn't enough. I have to get into the emotional makeup of the market. So how do I do that? How do I get into the emotional makeup of the market? What's the best way for me to do that? And I adopted this from other things that I've read, other assets or instruments being traded. And this, like I said, it sounds like a lot, but it's simple. I can look at Cardano, and if here's the thing, this is, and I'll say this, this isn't a tangent. I trade differently because of my experience level and the type of trader I am, meaning I trade a lot of different things. I traded just today, if we take outside of crypto, because I'm not trading a lot of crypto things right now just because of the market, but I traded 6 Forex pairs today, and I did 2 trades where I looked at the chart within 10 seconds and said, that's a good scalp. And those trades went well for me for a good scalp. Now, most traders are not able to get to that level or aren't at that level yet. Maybe they want to get to that level, or they don't want to get to that level. They don't want to trade that way. They want to trade swings or other type of positions. And I get that. I think that's completely fair, and I think that's a great way to trade. For me, I can, and I'm bringing this up because when I'm putting these filters on top of a chart and I trade a lot of different things, I've already done the research into Cardano and the team. So I kind of already, I go to the part of my mind that puts my mind in the perspective of that instrument class. So, and I know I'm getting more into the weeds and I keep saying that, but if we go to, let's go to Binance here, because I've traded just about everything on Binance. If we just go look at a chart and we just look at the assets or the instruments on Binance, I know Aeon, for instance. I know AMB. I know what I do is I have buckets of what these are. And we could do this by volume. So we could say these low volume ones, if I do trade these anymore like CIS, I know the makeup of the team of CIS. I've done the research. Wabi, for instance, I know the makeup of Wabi. And one thing you can do on Binance now, if you want more information, if you haven't noticed this, is there's a little link here where you can click on it and it will tell you a little bit more what that is. It'll give you a historical chart, a global chart, and you can dive in if you haven't seen this before. It'll give you some more information. So it's a good quick glance. It'll give you the website as well. So you can go here, see the issue date. You can see the supply and everything else, the issue price. So you get a lot of just general good information by just clicking on that. So if you're going to trade something, most people, and I share this because I'm a different trader. I'm a fast trader. But I've done a lot of the research for these things already. So when I look at these things, I put Wabi in a certain bucket of management style, of company or team style. So when I look at the chart, I look and say, okay, is there points in the chart where I see a lot of charts? You'll see big wicks, like Vibe, for instance. We're looking on the daily. You'll see a lot of wicks on Vibe. See, just a lot of rejection. You can successfully trade this, but this might be a pattern that you would notice. I might attribute one of these patterns to the team consistently jumping into strength. The other thing that you'll notice within crypto trading is what's called wash trading, which is basically just, and this, as regulation comes to the crypto market, this will start to die down a little bit, I'm sure. But where basically to keep this volume up, basically it's just trading BTC and shares back and forth. It basically becoming a market maker unto themselves, just to keep the volume up. So when you look at this stuff, these are the other aspects that you want to start thinking of. If you're looking at trading something into a long-term perspective, I highly do suggest that you do the full research. You look at the team, you understand what they're thinking, you understand how do they communicate, when price dumps, when something happens. You want to look at these things, you want to dive into these things, you really want to understand the teams behind it, because they are a driver of the true valuation of what's happening here. So look at the team, break down the team, look at their Twitter accounts, look at their communications, look at their Telegram, look at the other things. These are if you want to protect your capital in the maximum way possible, you need to take this seriously, and you need to actually put the lens of your trading through this lens. And you need to look at this, because these are the people, even if you're going to be in that trade for a week, you're trusting that team to not screw up your trade. And if they are a team that tends to maybe go off the deep end every now and then, you might want to consider not trading that if it doesn't fit your risk profile. All right, so now the final question here is a little bit unique to the crypto market, and that is, what are the developers who develop for it thinking or feeling? Now, this is something, if you're not experienced in the development realm and you don't know where to look, this can be something that's a little bit difficult. But what you want to find in the crypto market is you want to find things that have ongoing development support, that have developers that are excited about the actual thing, because what crypto assets really are is their development tools, in a way to look at it, for the blockchain. They do different things. Without getting into the details, they do different things, but most platforms need interest from a developer community. So what you want to see is an active developer community. And I shared something on Discord, which is the type of stuff that you want to be looking for. So I share these things in my market info and rumors section of Discord, the things I find interesting. So if you haven't joined Discord, find the link down below and just click on it and you can join the Discord group. But what this does, this report, is they do a GitHub audit report for 200 blockchain projects. And this is from June 2018. And what is great about this is you can see the amount of activity, the amount of popularity. If I scroll in here, so we make this bigger, you can see that this is ranked by commit types, commits this month. If you don't know what a commit is, basically it's developers checking in code. But you can reason from this that obviously if there's a lot of commits, there's a lot of developers that are developing, actively fixing things, actively adding things. You can see the popularity, the number of contributors. So the value of crypto assets will come in a couple different phases, but one of the values that you should be measuring is the developer support. How many developers are interested in this? The thing that I have a development background, so if you don't know that about me, I'm a self-taught developer, self-taught programmer. I built my business, my previous business was a software as a service business. I built that tool myself. So I have a development background. And one thing that I can share about developers is that they tinker around. So, and if they get excited about a certain platform or a certain thing, then you're going to see high interest and you're going to see it being pushed to the max. And that's what you want to see. Those are going to be the winners out there in the crypto market. It's not necessarily going to be the fastest or what you would consider the best, because it will have to be supported by developers. So it's like anything else. You could have something that's really awesome, but if no one knows about it, no one uses it, it doesn't matter. It's the same way with crypto, is that you could have something that is built awesome, but if developers aren't adopting it, it doesn't matter. It might be a slow pace. So understanding that aspect, this is where the value of crypto is going to come into play. So you want to be watching these type of things that rate this, that talk about developers, that talk about where developers at. Even if you don't understand this, if you're serious about this asset class, understanding that a lot of it is developer driven and that you have to get into the mind of developers. And one way to do that, one easy way to do that, is just go to the sites that they visit. Just look for sites of top developer news. And even if you don't understand it, just getting a general feel. I'll share something that I noticed. One site that I visit is TechMeme. And when I used to visit this every single day, kind of was my break for lunch, or I would just take a break and I would visit here and see what was going on in the tech world. And I noticed a switch and a change. I was already trading cryptos and everything else, but when I really noticed a change, I saw it a little early on. I'd say I think around October to November, before it really started making its run in December and January. I started seeing TechMeme talk more about cryptos and Bitcoin more than it ever had. Now, when it really hit its peak, it was around, I think, March, where pretty much every story on this site was about crypto. That's when I noticed there was a major shift. I started seeing the shift early on here in just the news site here. But when I started really seeing the shift is when pretty much it was mentioned every single day here. And then I was seeing another site, if you want to really kind of dive into developers, is Hacker News. So if you go to Hacker News, it's from Y Combinator. It's just a message board, but here this is a place that a lot of developers do hang out, do talk. You probably might not understand much of this, but what you'll notice is you'll just start noticing a trend around maybe things that people are talking about. This is one of the things that if you're going to do the technical side, or not the technical side, but the fundamental side of trading in cryptos, then one of the ways that you can get good at that is going in places where your other traders are not going to go. And understanding the developer side is where other traders are not going to go. That's where maybe and this is where this comes into play. You might see a high developer interest in ADA, for instance. Let's say that I see on here, I see a high developer interest in ADA. That might give me more confidence for when I go and enter a position in ADA and I have more conviction in my trade. This is where these things come into play. This is how it takes it to the next level. It's just not simplistic and just kind of reading news just for reading news. It informs your trading decision. So understanding that and having a deeper knowledge of that means that you'll be more conscious about maybe giving the trade a little bit more room, or maybe looking at that as a longer term position. So you would be looking at entering trades where it's a longer term play. And I'll say ADA, Cardano, I would consider in that realm, where when I enter a trade in Cardano, this is definitely a longer term play. I'm talking anywhere from 6 to maybe 2 years. I do see Cardano as still being around in 2 years. So I think that that's one of those that you could say has a higher probability will be around in 2 years. So when I'm looking to add in Cardano, that's the perspective that I'm taking from. But I also gauge the developer interest. I know I went on way longer on a lot of these topics than I anticipated. I really thought that this video was going to be maybe a half hour long. But as typical, I like to expand a little bit more and not just share simplistic advice, but really try to give you something that you can take from this video. Here's my philosophy, and I'm ending the video here in a few seconds. My philosophy is that I can just share things with you, and that's great, but I should be able to share things where you can immediately put into practice into your trading right away. Otherwise, I'm just someone else giving advice on YouTube, and I don't look to be in my training and what I do. I don't look to be just someone else just regurgitating the same stuff. I look to advance you as a trader. You're taking your highly valuable time to watch the video here, and I respect that. And out of respect, what I'm looking to do is give you something you can immediately put into use into your trading. That's going to make you a better trader immediately. That's going to advance you as a trader immediately, not to just speak in platitudes and things that I think don't have true impact on your trading. So that's my philosophy. That's why sometimes these videos are a little bit longer, and hopefully you do find value. If you do, definitely, if you have not subscribed yet, subscribe down below, share this video, and you can click the bell so you'll be notified when I release videos. I don't have a set schedule that I release videos, but I try to do a couple a week. So it's not every day, but I try to do a couple a week. It's really comes from a value perspective. If I did one every single day, then I don't think there'd be enough value that you would get out of it to really advance your trading. The other thing is you'll find links to tools in the description that I use, also a link to the Discord group. If you are interested in the training, you'll see a link to that as well. Just to recap, here are the market empathy layer 1 questions that you want to ask. And these are, we've gone through every single one of these questions. And just to recap, I know there's a lot here and I covered a lot. And just like anything else, it takes practice and it takes repetition for you to say, oh yeah, or not really, oh yeah. If you need to put a list and say, what's the short interest? If I were to short right here, if I saw this as a shorting opportunity, which I would say this is not quite a shorting opportunity, but if I did, where would my stop loss be? What are the various actors thinking? All the questions that we've gone through here. So it just becomes second nature. If you do need to have a list, create a list in the questions and just go through it and answer it. And if you can't answer the questions, that's where you want to ask, do I really want to be in this trade? If you and if is it a risk that I don't know this or I can't reason this? That's one question you should ask. Is it a risk that I can't get an answer to this? Is it a risk to the trade? And if there's too many risks in the trade, should I really be doing that trade? That's an additional way to look at these questions. So that's all in this video. I definitely look forward to seeing you in the next one.